The receipt and payment account of Rotary Club for the year ended 31st March 2000 is given. Receipts and payments. Prepare income expenditure account keeping in view the following adjustments, and few adjustments are given. So we have to prepare income expenditure account of Rotary Club for the year ended 31st March 2016. We'll start with the payments. First payment is by general expenses, rupees 650. So on the expenditure side, two general expenses, 650. By salary, 1000. Adjustment number 3 is salary has been paid off for 10 months only. That means this salary is for only 10 months. So 2 months salary is outstanding. So the two salary 1000 plus outstanding 200. Total salary for the year is 1200 rupees. The next is by drama expenses, rupees 625. The two drama expenses 625 on the expenditure side. Next is a newspaper, 225. Two newspaper 225. By donations 350. Two donations 350. Donation is for general purpose, therefore transfer to the income expenditure account. By tax 120. Adjustment number D. Prepaid tax is rupees 20. So 2 tax 120 minus prepaid 20, total 100 rupees. Next is investment, capital item, will not be taken to capital income expenditure account. Then the receipts. First item is balance, opening balance of cash. It will not be transferred to income expenditure account. Next is subscription, previous year, current year and next year. For the current year, subscription is 4500. Total members are 400. Each pay 15 rupees annually. So subscription due is $400 members at the rate of 6,000 rupees. Subscription actually received is 4,500. So subscription worth rupees 1,500 for the current year is outstanding due. So in the income expenditure account, on the income side, by subscription receipt for the current year 4,500 plus due for current year 1,500, total 6,000 rupees. Subscription for previous year, next year will not be included. Then on the receipt side, two donations 650. So on the income side, by donations 650. Next is your income from drama 1025. So income from drama 1025. Then sale of old furniture. Cost price is 300 and sold for 225. Furniture is an asset, not transferred to income expenditure account, but loss or profit on sale will be transferred to income expenditure account. Furniture worth rupees 300 sold for 225, that means a loss of 75. So on the expenditure side, loss of sale of old furniture, 75 rupees. Now adjustment number P. Accrued interest on investment at the rate of 10% per annum for 6 months is due. is accrued. Total investments are 2000, and on it 10% interest is accrued for 6 months. So investment of 2000 rate of interest is 10% for 6 months, comes to 100 rupees. This is accrued interest on investment. On the income side, by accrued interest on investment, 100 rupees. Then adjustment number E, last one. The book value of building is 5,000 and 5% per year depreciation is to be charged. Building is asset, not transferred to income expenditure account, but depreciation on building will be transferred to the expenditure side. Amount will be 5,000. Cost of building is 5,000. Rate of depreciation is 5% for full year. 250 rupees. Depreciation on building. So 2 depreciation on building, 250 rupees. The total of the income side is 7,775, whereas the expenditure side is short by 4,300. This difference will be known as surplus. To surplus being excess of income of expenditure, this is the balancing figure. From the under mentioned receipts and payment account for the year ended March 31st, 2016 of Neki Club, prepare income expenditure account for the same period. Receipt payment account is given for the year ending 31st March 2016. Adjustments are given. We have to prepare income and expenditure account of Neki Club. We will start with the payments. First is by purchase of furniture. This is purchasing an asset, so will not be taken to income expenditure account. Next is by salaries, 2,000 rupees. Adjustment says salary outstanding is rupees 1,500. So in the next income expenditure on expenditure side, to salary 2,000 plus outstanding 1,500, total 3,500 rupees. Next is your telephone expenses, 300. So 2 telephone expenses, 300 on the expenditure side. By electricity charges, transferred to the expenditure side. By electricity charges, 600. By postage and stationery, 150. 2 postage and stationery, 150. 2 entertainment expenses, by purchase of books, 2,500 rupees, again asset, not taken to income expenditure account. And by entertainment expenses, 900. Adjustment number 2, entertainment expenses are outstanding rupees 500. So entertainment expenses 900 plus outstanding 500, total 1,400 rupees. Next is purchase of 5% government papers, 8,000, and purchased on 1st September 2015. This will also be not included because it is an asset. Miscellaneous expenses, rupees 600. 2 miscellaneous expenses, rupees 600. Now the asset side. First item is to balance carried down, that is opening balance of bank is 25,000 rupees. This is opening balance of cash or bank, so it will not be transferred to income expenditure account. Next is the subscription for 3 years, previous year, current year, next year. Subscription for current year is 10,000 rupees. plus adjustment says current year subscription accrued rupees 400. So on the income side, to subscription 10,000 plus accrued for the current year 400, total 10,400 rupees. Next is donation. To donation 2,000. This donation is for general purpose, no specific purpose is given. So transfer to income expenditure account to donation 2,000. Next is your hall rent, rupees 300. So transfer to income expenditure account to buy hall rent 300. This is all buy. There's a printing mistake in the book. So all buy. So buy hall rent 300 rupees. Next is your interest on bank deposit, rupees 450. Interest on bank deposit, rupees 450. Adjustment says, adjustment number 3, bank interest receivable is rupees 150. Interest receivable on bank deposit is 450. 150 is still receivable. So buy bank interest 450 plus outstanding or accrued for the current year 150. Total interest for the current year on the income side 600 rupees. Next is your entrance fees 1000. Entrance fees is a item of income expenditure account of revenue nature, but adjustment number 5 says 50% of entrance fees is to be capitalized, and that means entrance fees 50% part is revenue, 15% part is capital. So 50% part, the revenue part, will be taken to income expenditure account, and remaining 50 will be transferred to the balance sheet on the liability side. Adjustment number 6. Furniture is to be depreciated at the rate of 10% per annum. Total furniture has been purchased on 1st July 2015 for 5,000 rupees. Rate of depreciation is 10%. So 5,000 into 10% for 9 months, because furniture has been purchased on 1st July, from July to March, which comes to 375 rupees. Depreciation on furniture is 375 rupees. So to depreciation on furniture 375. The club had purchased 5% government bonds on 1st September 2015 worth rupees 800. Interest is not received on these government papers. So interest due on these government papers is 8,000 into 5% for from September to March, 6 months, which comes to 200 rupees. So accrued interest on investment is 200 rupees. 800 into 5% for 9 months, from September to March. The total of income side is 14,000, and the total of expenditure side is running short by 7075. This 7075 will be our surplus. To surplus, excess of income out of expenditure, and this is our the balancing figure. This balance figure is the surplus.